Yesterday, I introduced topic 5, posting to the ledger. I showed you a short video reviewing the skeleton look at a ledger, what we call the T accounts, showing you the different kinds of accounts and their increase and decrease sides, and so on. All of this should be a review for you. Now on your screen, you'll see an actual view of a ledger page. The T accounts are to give you an idea of how those ledger pages will function. This will give you a better look at what a typical ledger page would look like. As you know, we are in the age of automation, and much of the work by bookkeepers and accountants are done online with software that is much easier to use than the old books of the business. However, to learn the basics of accounting, it's much easier to visualize all of this in actual books. At one time, the journal was an actual book showing chronological entries of transactions of the business, and the same way with a ledger. The things on your screen would be different ledger pages in an actual book. Now, obviously, things are much different. Everything is on the computer, but it's simply easier to learn the basics by looking at them and conceiving them as actual books, the journal and the ledger. As we've said before, the accounting cycle takes us from transactions where something is bought or sold to the next step, which is entering those transactions into a journal. Following that information from a journal is put into a general ledger. That process we're talking about in topic 5, which is called posting. And then after the information is in the ledger, the final step is to take that information from the general ledger and construct financial statements. The information in front of you, the general ledger in front of you, is actually taken from the corner grocery store. That was a problem that you had back in topic 4, and we'll come back to the specifics of that problem a little later. But before we do, I want to go through the parts of the actual general ledger. So we're going from the skeleton T account view to the actual look of the ledger pages. On your screen, you see a series of asset accounts in a general ledger book. Each of these would be separate pages, and you see that the accounts are listed. If you look here, for example, this page in the general ledger would be called the cash account. And if you look at this, you have a date. So as of January 31, 2018, we had cash in the debit column, which is the increased side, if you remember, thinking back to the T accounts and what you should already know, the increased side of any asset is the debit side. So we have cash in our business as of this date, January 31st, this amount, $12,300. The J1 in this reference column, we'll take a look at this little column here a little bit more tomorrow, but this J1 refers to where this money, this amount came from. If I'm curious as to where that amount came from, this tells me. J1 means journal, page 1. Another account, accounts receivable down here, another asset account. Obviously, this is an amount of money that people owe to us. So as of January 31, 2018, people owe us an amount of $3,150. This information, again, came from journal page 1. One side note here that we'll look at much later, but a note here. This is, all of these pages are in the general ledger. And by general, we mean totals of accounts. In this case, the total amount of money that people owe to us is $3,150. If we want to know who those people are, we would look in what we call the sub-ledgers. The sub-ledgers would indicate the customers, their name, address, all that information, and specifically how much each one owes to us. This could be several people, could be 10, could be 20. This doesn't tell us. This simply says that people owe to us a total of $3,150. If we would go to the sub-account, we could tell who those people are and how much each owes to us. We're going to hold that off till later. Back up here, the next page, and incidentally, as I go through this, you might note that each of these accounts, in this case inventory, has an account number, 103. If we go backwards to cash, this account number is 101. Typically, assets begin with a 1. Doesn't have to, but that's, again, the generally accepted accounting practice. Again, it's not a law, but that's generally what you see. Cash begins with a 1. Typically, 101 would be account number 1. 102 is accounts receivable. In this case, 103 is inventory. So we have inventory, again, as of January 31 of this amount of money, $63,923. Again, this information came from Journal page 1. We have office equipment. If I scroll over, we can see we have office furniture, $9,000 worth of office furniture. These are all assets. We have a building valued at $46,000. That's an asset. We don't rent it, we own it. So these are the assets of the business. Okay? Now, one other point here as we go through, at the bottom you see tabs. This is tab for assets, and if you are familiar with the Excel program, you know how this works. If I click on the next one, this says liabilities. Now take a look at the account pages shown on this screen. This now is in the general ledger again, but this is accounts payable. These are liabilities. As of January 31st, we owe $500. And again, that may be a total. It may be that we owe $500 to one person, but maybe it's a total that we owe to several people. There would be sub-accounts again to give us that information. But as of January 31st, we owe $500, and this refers back to Journal page 1. Accounts payable, again, are short-term liabilities, typically due within 30 days. This is a long-term down here. Account number 202, building mortgage payable. Remember that building we had valued at $46,000? Well, we owe money as of January 31st of $10,000. So we probably owe that to a bank or a credit company. Another long-term liability would be a truck loan, and this is a liability account because we owe $8,200 as of January 31st. And we have some blank accounts. If we have new liabilities, we have pages for them. We don't need them at this point, but they're available. So these are liabilities. Going back down to the tab at the bottom, let's go to the next one, owner's equity. This is showing us the value of the business. Owner's equity, the value of the business as of January 31st, 2018 is this amount, $127,473. And that came from Journal page 1, but this would end up being shown on the balance sheet, correct? And we'll show how that works much later, but that's the value of our business. Owner's equities have typically a credit balance. Revenue, these are typically our sales. This is how the business makes its money. It sells something. I think this is the corner grocery store, so we sell groceries and produce and so forth. As of this point, we have nothing in any of the columns, and we'll talk about why that is later, because last month we certainly would have made sales, but we'll talk about why that is not shown here, and that will be explained later. But when we do make a sale, it would be credited. Finally, expenses, and again, these are things that, unlike liabilities, these are the costs of doing business. If you remember, if you owe money for a delivery truck or a building or any other accounts payable, those liabilities are there because we gain an asset in return. Not the case with expenses. We have to pay the electric bill, but we don't really get anything in return. It's simply a cost of doing business. And we have electricity expense, we have telephone expense, and they all have numbers, as you can see. Every account has a number. Heat expense and salaries expense. And again, there's nothing in these accounts, and we will explain why that is later on. So these are the accounts of the business. Again, the tabs at the bottom will show the different kinds of accounts, and we're going to come back to this and do some actual posting in an assignment and demonstration for you tomorrow. But at this point, I wanted to point out the parts of every account. So beginning back at assets, all of the assets are here. It has a name. The reference column means this is where the money came from. Every account has a number. Assets begin with a 1. If we go to liabilities, those begin with a 2. Owner's equity typically is a 300 number. Revenue typically is a 400 number. And expenses typically are 500 numbers. At this point, I would ask you to complete the questions for this assignment.